Hello guys, glad to have you on board again today. We'll try and covering on an intraday basis today because I just made it for the French users and we've got a little bit of a volatility pickup yesterday after the Fed meeting. But the thing is that I'm going to get to the conclusion because that's what's important in here, how I get to say what I say, not just what I say itself. Absolutely no trading to do out of this because so far, yes, we did have something out of the US yesterday evening after the Fed, or during the Fed press conference actually. Still, we managed to have a bearish candle close on the daily chart for the cash market and the future. We closed at the lows, and it's been happening. It's not been happening since quite a while, but still, that doesn't even mean any fucking thing. So we really need to have a confirmation by today or tomorrow. Obviously, still has the NFP pending later tomorrow. So the thing is that it is goddamn hard to figure out any fucking thing. Just to sum up the core informations, and what I think is, this is all about the dollar. So the dollar has been pulled back in yesterday with the Fed. The question is this a short-term pullback that's going to build up an accumulation toward potential bullish breakouts with the NFP? Or is the NFP about to finally settle down the dollar and pull it fucking down? So the question is, we've got negative data coming from the US out of manufacturing PMIs, but still we've got bad numbers after bad numbers, and the market doesn't give a shit. And that's really a concern. So we're going to get straight to the conclusion. Dollar is the game changer. It's been locked down recently, and it's the reason why the volatility is also locked down. It feels like Wall Street just said, fuck you. You're not going to trade the dollar, and you're not going to trade the indices. We're both going to lock them down. Dollar will remain neutral as long as necessary, and will fuck up the volatility as long as necessary for the bears to leave this goddamn market. And just like I have this feeling, and I've been sharing this to you for a long time, the goal is just to put the bears out of the game. AUDNZD will be out, will probably go down. It's just as this. Too much bearish speculators, so we need to fuck them first, and then only and after we'll be able to go down. So those who don't manage the risk, they will definitely end up with losses. Those who do it well might even end up with losses in the speculative area, just like I've done. But you can be damn sure, if Wall Street goes down, I'll be there. It's just we need to do it with some decent risk management. If you sell because you think it's going to go down, then first need to be honest that you don't know a goddamn shit about the market. It can very well go up for the next 5 years. And if you're still bearish in this, you're just going to lose it all. So the thing is that we don't know. All I know is what I think. I have kind of a sixth sense about the market. I know the market is trying to fuck me right now. I don't nearly even believe just one time that this thing is going to go up for the next few years. I just think they're just trying to fuck up their brains and doing anything they can to push as many bears out, or even make them buy the market right now, as we'll be able to reverse it at some time. So it just needs something. The market just wait for a signal to go down. I don't know what the hell is that signal. For now, I've got absolutely no information. The stock market can only go down if the dollar goes down and if the yields are increasing. That's simple as that. The problem is we don't have a goddamn fucking clue. So the thing is that no one does nothing because no one understands a goddamn thing. And if you have billions to manage, that's the only thing you can do. Just wait and see. If you want to speculate because you've got tinier portions of capital, then I think the only thing that can be done is selling this goddamn market or buying it really short term, being aware that someday it might end up ugly. But so far what we have is none of this. So let's having a look at this because I think this really explains the game. So we've got a peak up in volatility. We can start to see some kind of a support trend line building itself out of 4-hour chart time frame. So 1 hour is even easier to figure this out. All right, you can clearly see we're building up this trend line, support trend line, really clearly visible. Market is buying this. So that's great because that's a bullish rising wedge. So the thing is that as long as we remain in that structure, we can very well extract this structure by the upside. So I think, first of all, risk management to be doing in here near the 16 area. That was the plan. So I'm still forecasting us to go a little bit higher than that. Not necessarily crazy fucking higher. And remember about that trend line, I think we're going to probably lock on some gains near the 16 area. Question is, how will we behave after that? Either we're going to crash down the volatility and extract by the downside before picking up later on, probably by the end of the month, or something goes ugly, which means we go there, we just retrace a bit, but we don't go below 14 and we create an accumulation and bang, bullish breakout, and we'll have an ugly second part of the monthly expiration for the VIX, which means we're probably going to rise up to 25, way more dangerous area. All right, so I still don't know. I'm going to show you what it will look like in an equivalent throughout the stock market itself. All right, so this is what we have. You can clearly see this same trend line is setting itself in here. The same structure for the bearish wedge, for the expanded wedge is setting itself. All right, so the thing is that this is what we do. If we go there, all right, so if prices anticipate volatility, we see that we got a 23.2% Fibonacci, 23.6 Fibonacci in here, 38.2 in this area, and I think, oh my God, no. All right, that's out of recent prices, and if we consider this as being our major bottom, which I don't nearly think is the case. If we take a 4-hour chart, we'll have a more decent view and point of view in here. The 23.6 is in here out of 2800. The 38.2 is in here, and I think that these are the levels we might be heading down to in the forthcoming days. That's in the purpose of a rising VIX context. All right, this probably will equal to a VIX out of 25 to 30 in some kind of pricing. All right, so if we just go there, probably just 20, 21, no more than that, and we'll obviously crash down the volatility right after. So I don't yet know how it will end, but let's say worst case scenario is that we go straight line to 38% Fibonacci. That would be the worst case scenario. After working out this goddamn resistant context for so long, I mean, I've rarely seen anything like that, and never ever seen something like that happening after a bearish trend with bearish breakouts and everything we needed to sell this stock market. We just rebounced, and what we've done is basically we fucked up the bears by staying for so fucking long into the 4-hour resistant context. So that is no signs of bullish trend, because in a bullish trend we accelerate, we break out. We made not a single 4-hour chart breakout. All we've done is this dying, deadly purpose rising stock market. It's just been piling 11% out of just staying in the resistant context. All right, that's exactly what we've done. All right, we've been staying in here for almost 3 months right now. So 3 entire fucking months of deadly waiting in here, and that's what we do. That's how we've managed to trade. And it's even 3.5 months. So it's just this dead man standing in here has been dying right into the resistant context, trying to grind its way up until the day it might just lose it all and just go straight forward to support context. So the question is, we're rising. We don't know why. It's stupid. But still, if this game ends and has been put to an end by yesterday's Fed meeting, then if we're looking for supports, then this is where the support are. The question is, do we really have support? I don't really know. I'm not necessarily sure that we'll have some support. All I know is that obviously people will manage the risk upon support areas, and all the sellers will lock on some partial gains in here, pray for stop losses and stuff like that. But if we find no buyers, if we just have sellers risk managing, do you really think we got any chance to really rise from the ashes? Because the problem is the price structure itself, and I've been warning you for this. If the dollar goes down, and if the dollar was about to break out support, then it is just the beginning of something way uglier, something that's going to last way longer than that. Probably a 24-month bearish trend going to set itself on the dollar. It's 12 to 12 to 20 months. So something that's going to last and probably create some recessions trades. At least money will not circulate the way it was. So it may change something regarding the high valuation, might be the end of the economic cycle showing up if the dollar had to reverse. So that's the reason why they don't want this to happen. They do anything they can to just maintain the dollar in acceptable values. But the problem is when you destroy volatility, at some point something ugly shows up. It's what we call just speculative positions. And that's the danger, because when you just destroy volatility, you better have to handle risk management. So it better has to be doing well, quiet and calm, because any fucking thing that may show up, that's the problem about the stock market right now to me. It feels calm, but still every experienced trader knows this is just a calm before the storm, because we know the context itself is nothing but calm. So the thing is that it's nothing like calm. So we see low volatility and some hesitating market in some big areas like the dollar, the US stock market. It feels like it is not real. Well, then let me be honest. As a professional, I don't nearly even think that's normal. All I can say is that this is dangerous, because what we're creating in here is more aggressive behaviors. We're creating speculative scenarios that will pile up, and when one side of the game will win upon the other, and this is where it's going to last really fucking long. I don't nearly even think that what we're trading are weekly scenarios or early weekly scenarios. We're trading scenarios that are probably going to last for 50 weeks. So we can expect something that's going to last 1 year when we'll ever trigger the trends. I don't know if the trend is not about to be bullish on the dollar. It could be. But I have to pick a side, and to be honest, I don't nearly see a chance this thing to be bullish. It could be, but in this perspective, I'll just be wrong, and I'll just let it to those who were betting on the opposite side. So still having the same plans. I know this might be looking like I'm stubborn or anything like that. It's just that's my job, to figure out one side to favor. And to be honest, I really don't favor the bullish sides, both on dollar and both on the US equities. Even though we might be trading historical high, I don't nearly give a shit. What I'm going to give you as an example is that some people consider that, all right, now we're historical high, so we're obviously going to rise and rise and rise and rise. First, I'm going to give you a clue, all right? That's a rule I always follow, all right? Flat ranges, which means when we do market tops and bottoms at double top structures or double bottom, what we generally take as an example in here is that you take the Fibonacci retracement, all right? I'm going to tell you what I'm going to be selling the US stock market again, but just safely, and I'll tell you where I put the stop loss and why. The question is, you're going to have to use basics, and I would like to, don't I have the 105? Yes. All right. So this is what we consider. We're at 105%. So it's you take the retracement and you had 5% of this range on top of the resistance. If we get to daily close, all right, without upper shadow candle, upon this level, which is 29.75, all right. So if we get to daily close, breakout on top of this level, I'm out. I'm not even trying to sell this shit again. The next area is going to be this one, 127, 138, and I'm not going to do any fucking thing in between. Or even the 200, the 3,200 area, which is even higher than that. So there will be nothing to do for the next quarters if we get to cross this. The problem is, there really looks like something doesn't work out. All right, now we do have another bearish signal in here with a triangle. So either we manage to survive out of here, and just like we've said, we've got a 1 hour expanded wedge structure, which means as long as we stay in here, all right, we could just do something like that, all right, and then and we do anything we can until we manage to find some movement to get to the upside. All right, we could just do that. So if you think it's dead because that kind of structure is bearish, no, that just means if they want to control volatility, you have not a goddamn chance to make them do anything wrong unless something unexpected shows up, like black swan or anything like that. But that's not something we can trade. You're not trading hoping for a black swan. That's not how it works. We tried, it didn't work out. So for now, we wait, and we can short-term speculate, hoping for the goddamn structure to fucking surrender. But until we do such thing, all we have is higher highs. So It is not possible to forecast any bearish breakout without a catalyst. Yesterday wasn't enough. As we can see, we're starting to have range signals. So what do we do from this? Do we speculate just out of this? I would say kind of a dangerous approach of trading that even I, an aggressive speculator, think is really way too aggressive, inappropriate regarding the current stock market. So I would say as long as we stay below this, below 29.73 with daily candle closes, I suggest bearish speculation is still possible. Obviously, there will be some stop losses in here if we daily close on top of this. So that still leaves us a couple days and next week and early next week to figure something out of this market. So what I care about is what the fuck is going to happen in this area, in the resistance area. We had a bearish rejection yesterday, sorry. I'm questioning whether we'll find bears or not in this area in the days to come. Today, tomorrow, something like that. Am I going to take a trade? Eventually, yes, in shorter time frames, but I'm going to need strong signals. In order to see this and to assess that, I want us to stay there, all right? Because the lower we stay, the stronger are the odds to reverse this context, to put it down. And what I care about is that we go down, we're tracing here, and I'll take a trade in the bearish context in here, 1 hour bearish context. The problem is, so far, we still haven't yet reversed it. So if we were about to just buy it out of this and just V-shaped structure one more time, we're not even going to reverse the 1 hour trend. Just look how fucking long it's been lasting. This thing is not even a trend. The trend channel itself is wider than the context one. So it's very dangerous once again. It's just says one thing. This thing is gonna blow at some point. Be it bullish or bearish, who knows? All we say is that the momentum is too contracted. We're about to squeeze this area. Either we're just going to validate some strong bullish reactivation. The market will have a renewed confidence in the Fed and everything like that, which I don't really think is about to happen, but still, it's possible. Or the market just loses confidence, the dollar just starts to destroy itself, and then the nasty mechanism I've been talking about for months, it's just going to set itself. Everybody was safe dollar and saying, okay, this is US who's holding the most regarding the slowdown economy and everything like that. So this is where we need to put the money and all the usual shit, all right? People following the mainstream and everything like that, saying, all right, US is strong, so put your money in the US. This is where it's going to be the safest. If we figure out there's no safe place, then this is where we're going to destroy most of the value, because this is where everybody has been trying to store the value in the wrong footing scenario. So if it's about to be just as shitty as everywhere else in the US, or even more than that, with the political jitter that may come across, then the thing is that everybody is going to be trying to get the hell out in the same time, asking for the goddamn money. And that's how you create panic sellings, that's how you create recession trades, that's how you create end of economic cycle. So I still trade upon this direction. I could be right, I could be wrong, who gives a fucking shit. All I can tell is that swing trading right now is not possible. What we can do is intraday trading and trying to find decent odds for risk managing in the swing trades, which means you save up 50% of your trade trying to see and trade the bigger picture, just in case you manage to catch the market up. So how do we do this? Just like I said, 1 hour chart time frame, waiting for a reversal. So I think we can early trade this in 15-minute time frame. See if we have decent odds. So what I would like to see today in a 15-minute chart context on the SPX, and I'm not going to trade it. You really need to fucking understand that. All I care about is not for this to be traded, but I want to see eventually the 15-minute context being traded between 61 to 76% fib. So what I care about is the reaction in this area. Not necessarily today, but between today and tomorrow. All right, so for those who want to trade this aggressively, the 1 hour signal I gave you earlier, trade it on a 15-minute context. So you wait for 61% retracement at least. You want to trade this in the context if you do want to trade 61, or you trade outperforming the resistant context and close to 76% fib. So you wait for this to set itself slowly to the downside, and you wait for a bullish outburst, near the 76% fib to just sell with a triangle. It's absolutely necessary that you get a red triangle out of this, all right? Red triangle on this area, you take the range trade, you put the goddamn stop loss in here, you'll secure the trade in here, and let it go for the rest to be traded swing. If we ever end up breaking down these goddamn structures with lower lows, with lower highs, sorry, all right? So this, what we could have is this, major top, second top to build itself in here, accumulation to come forward in here, and bam, if we do have bearish breakdown, you'll have a safe trade to start building up the position sizing to the downside. That's the most aggressive way you can do this. If you absolutely want to sell the US, that's the only fucking way you can do it. Right now, there's nothing else to do but waiting. All right, let's be honest. Yes, we did have a pickup in volatility yesterday, but it's still far from being sufficient enough to really put some trades in this market. I don't nearly even think that's sufficient enough. So we need further information, we need much better risk management, and we need some signals and setups to trade. For now, nothing. I'm sorry, but there's nothing to do. All right, we could go lower, and if we go lower, all it's going to do is just going to shift down the Fibonacci retracement and stuff like that. All right, so how do you react to this? You do as simple as that. You use the tools advantage. I give you tools that provide comfort for trading, so use them. You're going to use framework. What kind of context do you want to trade? If you're a beginner, you're going to wait for range alerts. If you're an advanced trader or a professional, you can wait and be a little bit more aggressive for trending range alerts. All right, that's what I'm going to do. I want the candle close, so this is what I'm going to do. SPX, 15-minute context. Range context, search for selling entries with stop above 29.75. That's what we've said, 29.75. All right, simple as that. I've done my goddamn job, and here it took me 20 minutes to explain myself about the global scenario, the global vision. This actual job will take me less than a minute, because if I was about to do it without explaining every fucking thing, I know what I want to do with the US. I'm not going to buy them, not at all, and not for a long time. So I know I'm going to sell. All I'm caring about is finding decent and suitable context to trade this with signals. Now I've got something I may be able to exploit for the reasons we've seen, all right? In a 1 hour context, we do have early ranging signal, all right, that confirm what I like. This market tries to go up, but it still faces ranging. When we range, that might be a sign that the maturing bullish trend might be nearing its end. And if it does, then I'm starting to sell, searching for selling. That doesn't mean I'm going to succeed. All it says is that I'm looking for this. I have a setup to trade. I've got a trading scenario. I've got a risk management. So I've got the trading scenario. I'm waiting for the risk management area where I'm going to be able to trade with low risk. And then the future is goddamn in the market's hand. There's going to be an NFP tomorrow. It can be fucking me entirely. I might be taking a short trade. We might be dying in here, and the NFP will probably take out my stop loss. That's a possibility. So obviously, what's going to be the risk for this trade? I'm not going to risk more than 1% in here. It's going to be a tiny trade just to try dipping a toe just in case. And if it works out, then great. I'll have a trade that I can manage, and I'll be able to pile up some bearish reinforcement and stuff like that. But until then, and this is the target area, right? That's what we figured out. 28. This is where we got the 23.6% Fibonacci. And this is an area of interest. This is where I'm going to take my first profit. Right? So this is first profit taking area for this scenario. I'm not targeting any further than that. That would be just stupid. All right? If you target more than that, that just makes no sense to me. All right? So that's an obligation profit taking area in here. All right, and obviously we've got a maximum target in here out of 38% Fibonacci on the major scenario. All right. that still gives you a pretty decent risk management. Selling in here, the stop loss is going to be 125%, approximately 120%, 1.20% on the asset, all right, to give you a reward of potentially 4%. So that's interesting. So 1.4 to 1 to 5 risk reward ratio. That's interesting. That's decent enough for me to trade. All right. The problem is, like I said, VIX is problematic right now because this doesn't even nearly say it's going to be bullish. We don't know. Same thing in here, range structure. So we don't know. All right. You really need to be cautious. If you go all in here because you think it's going to go up or down, you're trading what you think. You're not trading what you. You may trade what you think, but it has to be confirmed by technicals. So dollar, obviously, I don't know what the hell is going to happen in here. These are the previous highs. So if we fail in here and I had to go down, then this might be triggering a sell-off in the US. But for now, who knows? The problem is, obviously, all the stocks are very weak. Tesla is still bearish. Nothing to do in here but just let it go. I'm fully trading. I'm fully invested right now, so I'm not going to put any additional money in there. Just let it go to the targets. Is all I can do. Apple has been selling this yesterday out here, close to the market top. I've been selling this signal with this one. So I'm just waiting for the range to build itself. It is nothing close to mature. I think what we're going to do in here is just building a range. All right, so it's early range. So you don't have to press any button. There's no urgency in here. All right, just consider this being a range about to set itself. We're probably going to oscillate in here. I don't know what it's going to look like. Triangle, ABC freaking correction. Anyway, we're going to just range in this area. What I care about is when we bearish break out of it. So for now, you need to patiently wait. All right, let it go. Let it set itself. I'm just putting a little bit more money in Apple, just waiting for this to play its game. So waiting for a range. Those who are beginners in trading, you wait for this goddamn range to be mature. You will eventually trade the breakout of this range. This is where I'll start leveraging myself in Apple. As for now, I still remain very low position sizing, very tiny position sizing, speculative trading, just putting some money in the market just in case anything unusual happens, like a bearish news flow, which just fuck up the thing, so I don't have to run after prices. So I'm here, I'm in there, just tiny position sizing, waiting for the price to confirm my vision was the one that goes to be proven right. Same thing goes for Microsoft. I mean, all those things, they better not lose the momentum, because if they do, all right, that's a nasty bearish engulfing we had yesterday with a signal on a totally crazy fucking overbought market. So you know these things are bubbles. If they fail, you know how it's going to end. It's going to be a market crash. So we know that all the Microsoft, AMD, CME, Google, all those shits, if they ever lose just a bit of their momentum, it's a crash coming over. So it's a minus 40% drop out of prices. And the problem is, no one wants that, because if it happens, there's so many assets that will be concerned with this, that will have to lose 40% of their valuations. And if this happens, how the hell do you think the stock market will behave? I mean, the indices will behave. They'll obviously have to surge to the downside. So imagine that if this happens, the stock indices will probably have to surrender 25 to 30% at least. And that's something that no one wants. It simply means a bear market is sending itself. So we don't want this to happen. No one wants that. But still, that doesn't mean it's not going to happen. So the stock market is not here to please every investor and give some free money without risk. The problem, we've been taking heavy amounts of risk, and it is going to be a matter. It's going to create some problems. And once again, the underlying volatility we're having right now is absolutely out of any usual standard regarding the current context. So we're dreaming. We better hope that we're not going to wake up a little bit too early with some unexpected catalyst. So we better brace ourselves for no black swan, because if some black swan shows up, we're not prepared for it. Right? It's going to be systematic risk instantly, because the risk management structure we're having right now doesn't even allow a single thing to go unexpected. So everything has to be perfectly playing the music. If anything goes wrong, then systematic risk will be down the corner and pretty rapidly. So I'm trading this because I think the risk is going to show up, that everybody bets against the risk, and that's a very dangerous structure. That's everything. Every time we're nearly reaching the end of economic cycle, we see this behavior out of US. They see the risk, and instead of pricing it in, they just fight it. That's as stupid as it could be. I mean, the risk is here. You know it's probably going to show up, so why the fuck would you increase the risk taking? All right, that's how US reacts before recession trades. I never knew this, but now I really live this, that you can be damn sure that the next economic cycle, I'll not be trading exactly how I did it here. I learned my lessons. When we get to rise the danger, when we get to increase the danger, what are we doing? All right, then China surrenders, Europe doesn't understand a goddamn thing, and US fight it. And it always ends the same. We all go down. That's simple as that. We recess, and then we start all over again. So I'm still deeply thinking that we're nearly recessing, but still you don't see it coming because the US are fighting it for now, but still they do anything they can, but they won't be able to prevent it. All right, despite that, we just need the lockdown on dollar to just be removed. I'm looking at potential trading entry as well on the gold. If we do have a 1 hour signal, I'll be trading this in the forthcoming hours. You can see range signals. We can see the ranging context as well, the context boxes setting themselves on two clear areas, support, resistance. I would like to build the bottom on top of the previous support area, so all I need right here, right now, is a signal, which I don't have for now. I'm needing this signal to show up, and I'll wait for a triangle to come over, right? So if we can have a signal plus a triangle in the next coming hours, I'll definitely take this trade in the gold. So the stop loss must be set out of the previous low, so I would say below this, so below 1260. Alright, so it's the stop loss in here, and maximum target will be manage the risk on top of this resistance, and you can target a little bit higher than the second one. So I would say first profit taking area must be done in here when we reach out to this resistance. Shit. So no, I would say in here, first profit taking in there, second profit taking if we manage to rise from this, and there will be an eventual third taking profit if things really started to get out of control and everybody was rushing for safe haven demand. Then that will be an eventually 1460, and that's the maximum you want to target in here. If we get to those prices on the gold, in the daily and weekly context, if we get to overcome weekly context, that's obviously where you want to sell. You sell the goddamn gold, and in here you profit take, and you even start reverses. All right. So I don't know. I'm not targeting any further than that. But those who want to have longer targets, you can save. You can try to maintain a little bit of the position sizing opened for eventual target in here, but those targets will take weeks to be reached out to. All right, even if we're heading to a chaos, these won't be reached out to unless 2020. All right, so it's a long shot. All right, it has to be holded for weeks, but still, if we were about to build a support in here, I think that's what we may be targeting. In a weekly basis, of course, we obviously need to close the week at the high. So if we close like that, it's not good. All right, we need a weekly reactivation signal out of here. As you can see, the trend channel is bullish, so the weekly trend remains bullish. We're trading 50%, so if we're slipping below, you take your stop loss. That's no big deal. It was just a speculative trade, didn't work out. That's simple as that. All right, if it works out, you may be targeting some daily 4-hour targets, daily targets, and eventually, if you really want to be long-term shorting on there, you can forecast weekly targets, but no more than that. This is where it gets ugly selling. This is maximum target and even reverse. In here, we're looking at long-term selling entries. I just figured this out. It's simple as that. You trade this on a 1-hour chart time frame. You're probably going to lock on your first profit taking in the 4-hour resistant context. There is obviously a second profit taking, obviously has to be done in a daily context, and if you want to target the weekly context, this is the maximum you want to do. All right, that's it. And obviously, the longer you will trade, the longer it will take to reach out the targets. All right, the maximum target, like we said, probably not going to be reached out to unless late stage 2019, or eventually even 2020. All right, first profit taking can probably be reached out to in a couple or 2 to 4 weeks. All right, we can expect this to be reached out to, yes, and say early June. All right. In a month from now, we could be able to reach out the target for this one. These are not trades that you're going to catch up where the gain, then you're going to pick up the gains tomorrow. All right, these are no intraday trades. All right, obviously. Anyway, that's it for today. That's all I had to share with you guys. So that's the only safe dollar trade I would say. It's obviously risky because, just like we said, we're trading 50% area. So there could be a bearish breakout in here. If I'm wrong, I'm going to be instantly taken down. It's a straight line, all right? If I'm wrong, if the signal triggers and if the market goes take down your stop loss, don't be surprised. It simply means that the dollar is so strong and that Wall Street want to do maintain low volatility for an extended period of time. And they want to keep it under control. It is just we're betting that they won't. So at some point, I clearly think that they won't be able to handle low risk and low volatility. But still, that means speculating against Wall Street's billions. And if you want to do this, then believe me, you have to be patient, you have to be really cautious, and you have to do it well. So far, it hasn't been working that much, but still, I kind of think it will be at some point. It's just that I'm trying and trying with risk managing, just until the day I get proven right. And the day I will, you can be damn sure I'm going to be putting a lot more money in the market. But for now, I need to just dip in a toe here and there when I see some risk areas where things could get out of control. All right? So eventually gold could get out of control, but still everything just points out to, no, we're fine, we're breaking it down, gold goes down and everything like that. All right? So if it goes down, I don't care about gold until it gets to the daily context, and the next time we'll care about that shit will be probably 1200. All right, so I don't know. I don't nearly think we're going to go there, otherwise I wouldn't even be trading this. But there is a low risk area on shorter time frames to speculate. That's all I can tell. That's the only trade I want to do ahead of the NFP, and otherwise I just wait for the NFP and the eventual pullback that we talked about for the stock indexes that might be catching up some gas and some interest in the forthcoming hours, but only if we do see some interesting context. Remember that the 15-minute chart, it must not do this. I mean, if we're here in a few hours, if we're there at Wall Street Open, that doesn't even nearly fit the plan. We need to have two sets of waves. You need to see first acceleration in the trend channel. We need to see a pullback, and we need to see a second acceleration. All right? If you don't see this, then don't nearly even trade that shit. Just let it go. If they're V-bottoming one more time, don't even get in selling. You're just going to give up your stop loss for Wall Street to pick it by tomorrow. So simple as that. We really need to see two sets of waves and at least some hesitation in between. All right? So be patient. All right, later guys. See you tomorrow to see how it goes. Tomorrow's obviously we're not going to be doing the podcast in the morning. We're probably going to do it post NFP, just so we'll have the number and we'll have something to talk about, because probably tomorrow morning there'll be nothing to say but just wait for the NFP.